Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, amazing people all around the world of crypto and blockchain. And today I have another amazing guest. He is a CPA. His name is Patrick Camuso. He's a founder of Camuso CPA. Patrick, welcome to the show.
Thanks for having me. I appreciate it.
You're very welcome. So let's kick things off and ask you first, what is your background and is it a logical background for what you're doing now?
Yeah, I would say it's pretty logical. I started in the Big Four in the investment management group. So we were doing the accounting and taxes for mutual fund companies, hedge fund companies, private equity companies. So dealing with, very large data sets of financial transactions and normalizing and adjusting them for tax purposes and then reporting the taxes on them. So, that's where I started my career. And then I very early on got involved in Bitcoin and cryptocurrency and launched my firm in 2016 to serve at that time mostly Bitcoin investors and Bitcoin miners. And then it's just basically expanded with the industry through all the iterations now, from just Bitcoin, then Ethereum, then ICOs, then DeFi, NFTs, and now Web3. So yeah, I would say it's pretty logical.
Awesome. So you see yourself more than just a CPA firm doing taxes. You see yourself as a strategic partner to organizations. So how's your vision and approach helped those companies?
Yeah, so companies usually come to us with an initial pain point, and that is usually the fact that they have all these transactions on chain and they can't account for them appropriately. So that's usually where we start for them. And really that is, the best starting point because you need to have accurate financial statements to do anything else from a business perspective and when it comes to making decisions. So once we're able to get that in order, there's several different things that we can do. Obviously, we can do their tax preparation, but we can also do their strategic tax planning. So, looking at their current entity structure and business operations and making sure that that's optimized from a tax perspective to legally save taxes and to also protect from any tax issues that can arise in the future. Additionally, like once the accounting is complete, we can help with financial modeling and building cash flow budgets in helping to assist companies that have maybe done a TGE event with maintaining their company properly and planning for the future properly to make sure that they're going to be managing their funds in the correct way. So it usually starts with the accounting, but then it can branch off into some of these other different areas.
Awesome. And then so I want to get into CFO services a little bit later, but I want to get into some of the tax things, right? Um, Industry shifted dramatically, over the past few years, right? So what do people need to look out for this year and they had a change of presidents, right? What do they need to look out for this year as far as tax strategies, trends? What do they need to look out for?
Yeah, well, firstly, with the new administration, they've signaled that they want to make significant changes when it comes to cryptocurrency taxation. So we definitely want to keep an eye out for that. There's not much yet, but there's indications that there'll be changes in the future, which will likely take impact on future years. I think it's pretty unlikely anything to be retroactive. So as it stands now for this year, a few things. Number one is last year we had revenue procedure 2024-28 implemented, which requires a shift from universal accounting to account-based accounting. So everyone has to basically shift the way that they've been accounting for their cryptocurrency starting January 1st, 2025. That's one big important change. And this account-based reporting, once you do make that shift and you allocate your basis and you're under this new accounting regime, there's some tax planning opportunities related to that because under the account-based reporting, the cost basis is going to be tracked on a per wallet basis rather than just a per asset basis. And this creates an opportunity to have more control over if you manage your flow of funds correctly, you can start to have more control over your cost basis that you're gonna be spending related to an asset. So like, you may have like a very high cost basis Ethereum, a very low cost basis one sitting in different wallets. You can strategically send one rather than the other for tax purposes to optimize your tax position for any transaction that you're going to do going forward now with this account-based reporting. So, there's these types of opportunities that, again, start with getting accurate accounting in place, and then, start getting strategic from there once you have that base built for yourself. Additionally, I would say loss harvesting. Anytime you're in a position that's underwater, you need to consider loss harvesting, consider the fact that wash sales generally don't apply to cryptocurrency transactions. There does need to be an economic substance associated with the transaction, but there's really no exposure when it comes to wash sales. So, especially with the drops we've seen lately, loss harvesting could be a great opportunity. And there's many other tax opportunities with crypto, whether it's putting it in your retirement account or looking at charitable giving and other tax planning strategies like that. But I think the biggest low-hanging fruit is probably the account-based reporting change and the loss harvesting right now for people.
I remember I was in consensus in May, and there was an accounting pronouncement that got relaxed by the SEC, and then everybody was cheering about that, and I didn't really understand it. Um, how has that played out so far? I think it was some kind of accounting pronouncement. Yeah, how did? What are your thoughts?
You said an accounting pronouncement from the SEC.
I think it was to relax the ability for banks to um, to hold crypto or to be administrators. I think
Probably SAB 121 and
that's it.
SAB 2.
Yeah, that's it.
Yeah, so that does create a big opportunity for how companies are accounting for their crypto. Before, they were going to have to include the crypto as a liability that they were holding for their clients. And SAB 122 rescinded that, so they don't have to treat it as a liability. So, it removes that requirement, and it makes it like much more favorable now for companies to be holding crypto because it's not going to get reflected negatively on their balance sheet. So, how is it playing out? I think it's positive overall. I mean, these institutions out like move kind of slower too. So, I think that level of adoption does take some time, but that is like an avenue that's opened up, and I think that we're going to start to see more adoption because now that issue is cleared. But I don't think it's not like necessarily like they piled in right after it was rescinded, but I do think that it's going to continue to pick up.
Got it. Okay. So you said something interesting that I did not know. You said you don't have to account in terms of asset anymore. You have to count in terms of wallet. Now
Yeah.
there are different kinds of wallets, right? There's let's look at them. This year I had to restate. I had to restate my crypto because I got a distribution from Celsius. So, as far as the regular crypto wallets, what are the opportunities in that restatement of cost basis, and how do you capture any, I guess, arbitrage or any opportunities from that tax opportunity, and then bring it into your next reporting periods for the future for
Well,
yourself?
the way that it works, it's like with the revenue procedure, you need to do your accounting through, say, like the end of 24, and then you need to allocate your calculated basis to where your actual holdings are. So that's the start of it. It's like allocating the basis. You need to allocate the basis in a consistent manner. There's a few different ways that it can be allocated. There's an opportunity to optimize things there based off of your basis. Then the bigger opportunity is how you manage those assets going forward, because now those cost bases are allocated and they're associated with like specific tax lots. and you have the freedom to take those tax lots and move them into another wallet and segregate them. Like if, if you had the cost allocated to assets on a wallet that you're going to be transacting in, or like an exchange, you can then segregate those tax lots to another wallet and then control when those tax events happen. So if it's a low basis, you may want to keep them segregated. If it's a higher basis, you may want to strategically use those sooner. So it gets kind of situational, but you can start to control the basis a little bit if you control your flow of funds on chain. Um, and there is that allocation opportunity before that too. Another important thing related to this is that there's also this requirement now that for standing orders, it's always been this way that the default accounting method is FIFO. In the past, though, people were, they'll years after the fact sometimes apply HIFO or some other method under the guise of specific identification. The IRS has identified that as more as an abusive tax practice, and now they've implemented the account-based reporting and the secondary requirement, which is standing orders. So you're defaulted to FIFO unless you leave standing orders. And what are standing orders? Standing orders are basically you saying what accounting method you want to apply to specific assets. So if you just don't document standing orders in your wallets and don't document them with brokers, you're on FIFO from here on out. If you do take steps to document standing orders, you can get on LIFO or HIFO or other methodologies.
You had to pronounce, you had to say that at the beginning before, you can't shift in later years.
Yes. Oh yeah, like you can't come like a year later and say, oh, I wanted to do HIFO for these assets. You have to dictate an accounting method before the transactions take place.
I guess I'm on FIFO. So my plan is just to hold on to it, and hold on to the cryptos for a long time. And we're not in any danger of having being taxed for unrealized gains, right?
Um, no, I mean, that got thrown around in the past, but that was just kind of headlines at the time. I don't really foresee that.
Okay, good. So, um, let's talk about the different kind of wallets, though. Also, you have the regular crypto wallets. Most people have that. These NFT wallets, right? And the artists aren't making any money anymore, or most of them, and the cost of the site, these, the NFTs are not $1 million per NFT. So how do you, like, is the NFT market going to come back someday? And if so, you just hold on to it long term, or can you really tax harvest your losses on the NFTs? And if so, how do you create a basis on that?
Yeah. Well, what's tough with NFTs is that they're tougher from like a liquidity standpoint because they're not fungible, right? So it's much tougher to sell them. And you do need to dispose of them in an arm's length transaction in order to be able to harvest a loss on them. So you do have to sell them. I've seen some services out there where people are buying a lot of these cheap NFTs. So you can maybe like sell it to something like that potentially. Um, but yeah, if you want to loss harvest, you have to dispose of it in a transaction. So you'd have to sell it basically. So if you do, then yeah, like you absolutely can take losses on it at that point, and it can help you from a tax perspective. In terms of establishing the basis, that would be based off of what you purchased it for. Whatever the mint price was plus the gas to purchase it, usually is going to be what the basis is equal to.
Got it. And then theft. Theft has been a thing in this industry. Either phishing or hacking, or
Yep.
you put your money on it, it's gone. I had about 14,000 in market value stolen from me in August through a phishing attack. How do you? My accountant in Connecticut's telling me I can't count that as a loss at all. It's part of business,
He said,
right?
"What's it?" I couldn't hear you.
it's just part of business. It's like that's part of the risk of being in the industry, and I can't, report that as a loss, even though I have a police report. How
Yeah.
do people how do people begin to start to get a tax breaks for their law for their theft?
Well, the problem is that theft and casualty losses used to be deductible on the Schedule A. And if I recall, that was removed as part of I think the Tax Cuts and Jobs Act in 2020 or so. So that used to be the avenue to do that, and it's no longer available. So there's really not a good way in most cases to take those types of deductions. Unfortunately. Now something like Celsius, you can take a capital loss on whatever the difference is between what you originally lost and what they've given you back more recently. But yeah, like if you're just talking like, someone scammed you out of your wallet or something, usually there's not much tax opportunity there at this time.
Got it. Well, there should be. So, uh, so I want to shift gears a little bit away from taxes and talk more about how you like strategic, really, executive CFO kind of level, functionality, or you offer CFO services,
Yeah.
right? To organizations. Why should they take you up on that offer?
Well, I've been working with Web3 businesses for a while. I've been through, token generation events and have seen the challenges in terms of like a lot of the business models and, managing their treasury. So I would say those are the reasons why, I've just sort of seen a lot of the issues that they're facing. And we're uniquely positioned to be able to, help them from the CFO perspective while also providing, the accounting and tax side as well.
Got it. So, what do you say to founders and entrepreneurs? You're like, what I found is most founders and most entrepreneurs like don't want to deal with the boring stuff, which is finance and accounting, right?
Yeah.
They like you have to convince them why they
Yeah.
need. So, what's your pitch? How do you convince them? Say, hey, you need this.
What I'll find is like, usually after an initial raise and when investors get involved, there starts to be somewhat more of a desire for these companies to, actually have more of like a mature financial management. Sometimes that comes from the investors, sometimes from the founders, sometimes from both. Overall, it's still an afterthought, and to a degree, I can understand that for the founders to a large degree because they have many different competing things for their time and attention, basically, all these different aspects of running their business. But ultimately, the finances and the accounting is one of the most important pieces, and it really what should be driving this most business decisions. You should at least be looking at them through that financial lens. So yeah, it's tough. I try to make it as hands off for the founders as possible. And once we get into a good rhythm, we can make it pretty efficient for them. To look at the financial models, look at the quarterly budgets, the financial forecasts, and compare them to where we're tracking. We can get into a pretty good flow with that. So I just try to really make it as streamlined as possible and say like, look, like, if you're raising money, if you're planning to do a TGE event, you're going to be managing a large treasury. You can't just kind of like phone it in with this. You need to actually start implementing best practices before you run into some issue that's going to actually hurt your company.
And those best practices will enable them to do what?
To ensure that they're managing their funds appropriately. Like usually, one of some of the things we focus on is budgeting and forecasting to a large degree. So, putting quarterly budgets in place, putting financial forecasts in place, creating financial models associated with their whole entire project, marketplace, token ecosystem, however, they're planning to monetize whatever their business is. So that's where a lot of the value is with that.
Yeah, I agree. Um, I just think what I found through the years is that, even me included, is our current educational system doesn't teach us how to be financially literate. You
Mm.
know, I had to work at AIG for a dozen years. I had to go through a training program at Northwest Mutual and understand personal financial planning. I didn't get that job, by the way. I was in crypto in 2018. They threw me out. But how do we go from an overall collective of not being financially literate to begin to embrace how to be financially, literate, and how do we start to do that as a society?
Um, that's a tough question, I would say. I mean, I've always been focused on being financially literate, I guess. So I think you have to just stress the importance of it. And I would say like teaching it as early on to people as possible would also be important. And just sort of making it a way of life for people. So yeah, I would say like I guess early education would be important.
Cool. Awesome. Yeah. Or changing the entire education system.
Yeah.
So, you know, um, so you have a podcast as well, right?
Yes.
So also I want to find out the story about your podcast, how it came to be, how you end up turning that into your business, how it supports you and supports your guests. How's it going?
Yeah, so I started the podcast maybe about like I guess maybe like a year or so ago, year and a half ago. Not too long. It really started because I was just doing a lot of LinkedIn lives and talking about basically like a lot of the topics I was talking about already. Was getting pretty good feedback on it. So I formalized it more into a podcast called The Financial Frontier. And really, I'm talking about different topics related to taxes, accounting, and finances in the Web3 and crypto world. So it really just kind of started with, I was talking about these topics, I was getting good feedback, and I was like, let me kind of formalize this more as a podcast. Then I started bringing on, guests like different people within my network, whether they're like other CPAs or CFOs or, financial advisors or valuation experts or, building like retirement platforms or like lending platforms, like these types of things. So I started doing those types of interviews. And that's kind of where it's at right now. It's like it's a mix of me interviewing different industry experts like that, and then also doing like my own episodes where I'm just discussing like a specific topic, or sometimes also looking at different current events that are going on. I just found like over the past year or two that, the regulatory environment has just been moving very quickly. So I guess that's why I started first doing the lives, and it's kind of just like led into the podcast.
Financial advisors, huh? Um, I took an exam. I think I was one of the first 100 people. It was one of those, not series, but like it was a professional crypto certification exam. Um, but I didn't go into podcasting instead. But I want to find out, what are the pain points of the crypto financial advisors? What's their area of focus? What are their challenges? And how are they solvable? You know,
Yeah.
and are they
It's
are they butting heads with the
Yeah, I would say like with the financial advisors, they really sort of started focusing on this probably maybe about a year or so ago. And, like that was like early on, and they're starting to sort of trickle in more. So I think there's been a lot of legitimacy added to the space over maybe the past like 2 years or so. And I think that has allowed them to, or maybe it's even pushed them to some degree, so having to have these conversations with their clients to a higher degree. So I think right now a lot of financial advisors are trying to get like a deeper understanding of it, figure out how they're gonna maybe like fit this into a portfolio or speak to clients with it. There are a few financial advisors that are, much more well along than that and actually are like very crypto literate. But I would say as a whole, it's kind of like in the early days for them. And they're like learning, and very few of them are working with crypto. But I think the trend is gonna move towards, it having to get integrated into their financial plans in the future.
And so I would think then they're only recommending Bitcoin, maybe Ethereum right now.
Yeah, yeah, for the most part, yeah.
Okay.
Unless they have clients, if there's some advisors I know that have clients that are deep into crypto. So, they're if you get someone deep into crypto, they're gonna have more than that. So, you gotta address that then if you're working with those types of people.
True, true. So the financial frontier. Some people will tell you that the financial frontier is DeFi and DeFi only. So how do we? And I would think it's DeFi too. I mean, but how do you get the TradFi folks to embrace and understand, or and embrace, that the future of crypto, the financial frontier is decentralized.
The ethos of decentralization, and a lot of what Bitcoin was started around as well, like all of those ideas. I don't necessarily know if they fully translate over into TradFi. I believe in them, but I think that's like a conundrum for the industry as a whole. Like I've been in crypto for a while myself, and you've seen these different adoption phases, and like with each adoption phase, like kind of the people that come in are different than the last group of people, basically. It's like a different culture to a degree, is another way to say it, I guess. So like, you had these ideological early Bitcoin adopters that were very like freedom oriented. Um, does the whole entire space include that ethos anymore? Probably not. So as we start to see like TradFi and Web2 come in, are they gonna just share all of our ethos with that, and or with, the decentralization movements that we've seen? I don't know. That, the fact that we're working with, permissionless blockchains hopefully means that as long as we get some regulatory protection, we can still have decentralization, and maybe some people won't value it, and we'll go to other places where they won't have it. I mean, look at like even, like with the Bitcoin ETFs, like a true Bitcoiner is going to want to hold their own Bitcoin, basically. But a lot of these, to get wider adoption, to get people into it that aren't going to do that, we start to see these things. So I don't know. I don't really know how it's going to play out. But I'm hoping that the options remain. We just saw some news where it's looking like the broker definition isn't going to be applied to DeFi in terms of the 1099 requirements for the IRS, which is big. So, like not having that requirement, and knowing that this is still going to like function the way it is in the States, to me, that's important, because we can still have decentralization there. And if people want to go and, hold their keys on Coinbase, it's kind of their option. And I think it's going to be like a mixed bag, kind of.
Yeah, I agree. I agree. Well, I look forward to see what happens this year. So, you know, you mentioned ETF, and they just postponed the Litecoin ETF until May. You know, so that's the SEC is making. I mean, the SEC is more favorable now than the Gensler SEC. So, how do you think the SEC view is going to help crypto in the next 4 years at least?
I mean, I think having a friendly SEC can be great. There's tons of legal challenges for these companies. A lot of the Web3 companies I work with, there are, have token generation events that take place in international entities, and like different places like Cayman, BVI, Panama. So, I think with a friendlier SEC, we can start to hopefully have more of that be within the US going forward. And I think that could be great for the country and for the founders of these businesses.
I agree. Yeah, sounds good. Well, I want to thank you very much for your time today. I enjoyed speaking with you. Learned a few new things. I have one last question. It's simple. How can people find out more information about you, about Camuso CPA? How can they become clients? How can they do that?
Yeah, definitely. The best way would be to visit my website, camusocpa.com, CAMUSO CPA.com. There's first of all a ton of resources available that will educate you on all these various topics we discussed. And of course, there's a contact us page there where you could reach out, complete a form submission, and we can set up a time to have a video consultation and discuss your portfolio and or your business. So that's the best place. But I'm also on LinkedIn. I'm on Twitter. So definitely follow me there. Reach out to me there as well. And I'm always happy to have a conversation.
Awesome. Thank you very much for your time today.
Absolutely. Thank you. I appreciate it.